Welcome to the Capital News. I am your host, Alex Kreitis. Today is May 13th, 2019. Thank you so much for joining me. I hope everyone is doing well and enjoyed your weekend, your Mother's Day weekend. So again, happy Mother's Day to all those moms out there. Hope everyone treated you well. I know you deserved it. So we're still bumpy. We're still going on this road. We're still in the financial world of Oz. So what took place today in the marketplace? Again, folks, we're going to go all around the world because this is global. S&P was down 69.5 points for the day, representing 2.4%. The Dow closed down 617, also down 2.4%. The Nasdaq closed down 270 points, representing a 3.4% decline. The Russell 2000, the small cap index, trimmed 50 points, also 3.2% to the downside. Oil, little move. WTI is at $61 a barrel. Brent is at $70. Gold, however, did make a little bit of a rally today. It is now at our technical level of $1,300 an ounce. Silver, however, did not catch a bid, and it is trading at $14.80 an ounce, so it's still under that $15 an ounce benchmark that we're looking for. Again, that is related to the mining costs involved, the break-even costs for the mining industry. We're still trading around it, but nevertheless, we were anticipating maybe in the midst of last week and what has continued today, there would be a bigger flight to safety and the precious metals market might catch a bid. It did not. Again, a little bit on the side of gold, not so much with silver. I don't like to talk about the cryptocurrencies because I'm really not an advocate for them. However, if you are watching them, Bitcoin has been on a tear recently. And I think over the past week and a half, it's gained about $3,000 per coin. The 10-year U.S. Treasury lost 2 percentage points and now sits at 2.405%, 2.405%. And the VIX, the volatility index, took off and increased 28 percentage points for the day, now sitting at $20.55. So quite the roller coaster to the downside, quite the cliff, I guess, we fell off. Now, of course, part and parcel for what we've grown accustomed to over the past several months regarding the U.S.-China trade talks has been somebody from the White House coming out if the markets were selling off. Oh, no, go ahead. Somebody go out there. President, you should tweet, do something. Send Larry Kudlow out there. Send Kellyanne Conway. Send Treasury Secretary Steven Mnuchin out there. Do something and say that the trade talks are constructive. Say that we are going to have a signing ceremony in a couple weeks. Say something, anything, just positive, because the markets just want to hear something. They don't care about what's actually in the deal. They just want adjectives of grandeur. That's all they want. That's all they're looking for. So go do it. Well, that was the same playbook that was employed again today. At midday, you have the Treasury Secretary come out once again and saying, well, the talks are ongoing. The talks are ongoing. And of course, the markets were selling off all day, and they were down a little bit further than what they ended up closing at. But of course, like clockwork, the markets started to catch a little bid, and they started to go up after the Treasury Secretary came out and made his comments that the talks are ongoing. Now, what does this mean? We already knew the talks were ongoing, but that's what I'm getting at, because the markets, while they were able, at least I'm talking about the Dow Jones right now, was able to be down about, somewhere in the $500 range there, 500-point range, it reversed again at the end of the day. So my point that I am making here, we will see if this plays out, but it's something that we have been discussing here for quite a while. And it's not just in regards to these talks, but it's in regards to everything, this whole entire economic and financial model in which we find ourselves. Is diminishing marginal returns starting to kick in? How many more times can the president, Larry Kudlow, we're going to talk about Larry because Larry might be in a little bit of hot water, Steven Mnuchin, Kellyanne Conway, or anybody else for that matter from this White House, how many more times can they come out and say the same thing? Are people really, do they really think this is the greatest show on earth? That they just keep going back for more? I mean, I'm sick and tired of it. Because we're not done here, because I told you we're going to go around the world talking about what's happening with global equities, okay? Because the president, once again, made some more comments, and we're going to get to that shortly. But are diminishing marginal returns starting to take effect? This is something I've warned you guys is one of my biggest concerns in regards to central bank policy. Will lower interest rates, will quantitative easing, will that still pack the same punch that it has for the past 10 years? I'm arguing no. That's the argument for diminishing marginal returns. Some people don't buy that. That's fine. I respect the other side of it because we are in the financial world of Oz. I even have to admit, and I do hear all the time, that this market can continue higher. Why? Because we've seen it do so. It is totally disconnected from the fundamentals of this economy. Now, what's also interesting, what we've seen in the past week of trading is 2 months of gains wiped out. 2 months of gains wiped out in 1 week of trading. This is what we were talking about last week when we said there was nearly $2 trillion of value wiped out from global equities. That's how fast this can happen. Boom. That's why I tell you guys to have a plan, be diversified, build cash. Because when this thing does go, and it will go, it's just a matter of time. You want to be able to be in position to take advantage of one of the greatest sales of a lifetime. And that's not hyperbole. That's not an exaggeration. You have to do your best to do it. And I know it's not easy because despite the fact that we're told there's no inflation, I know that's not true. And so do you. Your rent goes up. Your utilities go up. Your gas prices are going back up. Food prices are going back up. I mean, if they ever really went down, you have medical costs. It ain't cheap to live, folks. I know this. I understand this. And so do you. We are done with all of the BS coming out of this White House. I am sick and tired of it. And so should you. Because we deserve better than this. Because this song and dance is getting tiring, to say the least. Now, I applaud this president and his administration for taking on the Chinese. I don't want to throw out the misconception that I am anti-Donald Trump. For those of you who follow the Geopolitical and Political podcast, you know I fight for him on his behalf to hell and back when it comes to the Trump-Russia collusion story. And now the obstruction of justice, the three-ring circus that we are in the midst of. I defend this president where I believe he needs to be defended, and I criticize him and go after him where I think he needs to be critiqued. And this just really gets me going because the American people do not need to be lied to. We just don't. We need the truth. You want to continue with negotiations? Continue with negotiations, Mr. President. You are not making the details of the deal known. So if you're going to argue transparency, you're going to fall very short of that because telling everybody that everything is going to be great, that it's going to be fantastic, remarkable, historic, has turned out to be a big dud. Now let me get to this statement before we go around the world with the global equities. So this was something that, again, just popped up here on one of my trading resources, the news that pops up every once in a while. So this is in regards to the South Korean markets. It rose on Tuesday, revived optimism on Chinese-U.S. trade talks, fueled by U.S. President Donald Trump's latest remarks. What did he say? We'll let you know in about 3 or 4 weeks whether or not it was successful. But I have a feeling it's going to be very successful. Is it? Weren't we told this for the past 5 months? Now, all of a sudden, we're going to know everything in 3 or 4 weeks? It's going to be interesting, folks, because China has retaliated, at least in word. They are going to impose additional tariffs on $60 billion worth of U.S. goods, and that will take effect, at least from what we know right now, on June 1st. It's May 13th, so 2 weeks. So even if the president is accurate in his latest comments of 3 to 4 weeks, whether or not we're going to have a very successful deal, he has a feeling it's going to be very successful. He had a feeling it was going to be very successful this past 5 months, and now the Chinese walked away. Now, we're going to get into a little bit more of the politics on that on the Geopolitical podcast, so make sure you check that out, episode 67A. But how much longer is the market going to buy this? Again, the market did rally very slightly when Treasury Secretary Steve Mnuchin came out and said the talks are ongoing, but then they once again rolled over. I think this is going to be a continuing theme. The president was out on Twitter this weekend, of course, and today, and I think he's getting nervous, folks. He's getting nervous. And this goes back to our whole timeline, our whole theory that we have not deviated from, and we're not going to until something significantly changes that this president has erroneously and foolishly taken ownership of the economy and the stock market. And now, if he wants to get anywhere with this trade war, it appears that the stock market is going to have to sell off. Now, that's not good with his other narrative of being the champion of the U.S. economy and the stock market. So the president once again has perhaps boxed himself in. But if he had listened to my advice, now of course I'm a nobody here giving a podcast, but if he had just listened, maybe he could have been A-OK. If he would have said, I am here to drain the swamp, we're going after the income inequality, we're going after the fraud, the abuse, the regulations that keep the 1% up at the 1%, that keep the major corporations as big as they are because they just the laws that exist keep the little guy from competing, which in large part is true, folks. And he could have said, you know what? This is the long term. This isn't just a typical 4-year election, a 4-year term. This has to go on and on and on, well past 4 years, well past 8. And here's how we're going to do it. And it's not going to be easy. But here's how it's going to be done. And the economy's going to do what the economy's going to do, and the stock market's going to do what the stock market's going to do. And if everybody likes it, well, then perhaps we'll print great GDP numbers. And if everything's great, then perhaps we'll make new record highs on the stock market. But if we don't, it's still okay, because we're Americans, we're in this together, and we're cleaning house. And that's worth it. And from there, he could have done whatever he wanted because his base would have ate it up because that's what they elected him to do. I think he would have earned a lot of respect from independents because they would say, oh, you know what, maybe this guy's for real. He's not this whole, boastful, arrogant SOB that some people think he is, and he's just, exaggeration and hyperbole. Well, guess what? All he's been doing in regards to these China trade talks and a whole host of other things, especially with the economy, has been exaggeration and hyperbole. And so it fits the narrative of people who are anti-Trump or who are on the fence. Now, can he continue to maybe dance himself out of this? Yes, I think he can. But it's going to be a lot more difficult now because even if a deal is struck between the United States and China, I don't think it's going to be great. I never thought it was going to be great, but I did think that they were going to make a deal because I didn't think President Trump wanted the headache. I didn't think the Chinese wanted the headache. Let's just get together, get something done, and say, be done with it. Pretty much like the revised NAFTA, the USMCA. Not much change, but it's there, it's revamped, and that's still even in question because that still needs to be approved by Congress. But that's another day. So that's where we are. And before we go on the global equities hunt, let's just take a look here at, are we in a mania? Is that where we're at? Is this reminiscent of the .com bubble era? Because we were talking here recently about a couple IPOs that IPO just within the past few weeks. And of course, we're talking about Lyft and Uber, the ride-sharing services, okay? Well, ain't this dandy if you were an investor in Uber? They are now trading at $37 a share, which is a decrease just in today's trading of 10 percentage points. Almost 11, 10.75 percentage points to be exact, to the downside. All right? Now, you have to remember what this means in context. Last week, on Friday, we talked about their market cap being $76 billion. $76 billion on Uber's market cap, okay? Today, they lost 10%. That means they lost $7.6 billion today alone. They just raised in cash off of this IPO $8 billion. I mean, the investors just got screwed. Now, that doesn't mean that they're not going to get it back in time, but if you're an early investor, you're probably not too happy. Same thing with Lyft. Lyft is now trading at $48 a share, which was a decrease of 5.75 percentage points for the day. And to refresh your memory from last week, their market cap, again, this is Lyft, was at $14.6 billion last week. Today, with a 5.75 percentage decrease, you're now talking about $14 billion. So they just lost $600 million on a day. So, I mean, again, these are companies that IPO'd. They have top-line growth. They got revenue coming in, but they don't make money. They are not profitable. Will they one day be profitable? Quite possible. I don't want to put these people down. I'm just reporting the facts of the case. Maybe they can make a profit. But here is the mania. at least in my opinion. Why do you want to continuously put money in companies that are losing money? Don't you want to invest in a real company? Papa, am I a real boy? I mean, this is like Pinocchio. When are these people going to start telling the truth of what's going on here? Is it just glossing over everything? I mean, what a world it would be if, like Pinocchio, when anybody lied, their nose actually grew. Let me tell you something. There'd be a lot of ugly idiots walking around with some pretty big noses. All right? I'm getting sick and tired of this stuff. I mean, how difficult is it to tell the truth and just inform people of what's actually taking place? So we'll keep you up to date on these Lyfts and Ubers and all this other crap that's coming out, and we'll see how much money they start to make, especially if the economy is booming like we know it isn't. Now, Larry Kudlow, this is another story. Over the weekend, he was out there, I think it was on Fox News, giving an interview on the Sunday morning program, and he was asked point blank a very simple question, something we discuss here all the time. Larry, Mr. Kudlow, is China really paying the tariffs? No. Aren't the American people and the importers, aren't they actually paying the price? Well, he had to give in. He had to say, yeah, that's true that the importers are going to have to pay the costs, and then they're going to do one of two things. They're either going to eat it or they're going to pass it on to the consumer. Well, it takes an economic genius to figure that one out, doesn't it? I mean, the guy's credibility was in question. Does he want to be a cheerleader for his boss, the President of the United States? Yeah, I get it. But when your boss, when the President of the United States is out there saying a complete fallacy, I mean, and he should know better. The President should know better. And to expect his people to go out there and continue to lie to the American people, to say, oh no, China's going to continue to pay it, and they've always paid it, and they'll continue to pay it. It's just malarkey. It's a flat-out lie. We don't need it. We don't deserve it. This is the problem. This is one of the reasons the president was elected. Everybody was tired of being lied to. Now what's happening? They're being lied to again. The economic literacy in this country is not good enough for this president to go out there and say, well, the Chinese are paying for it. People just don't understand this. As simple as it is, to people who have some understanding, it's a no-brainer. So the president is doing a huge disservice by coming out and saying China is paying for these tariffs. They are paying for them in an indirect manner, perhaps, because of the increased costs. It could lower the demand for Chinese imports. Okay, that's possible. We'll see if that plays out. But they're not writing a check to Uncle Sam, which is what he's making it believe. Ain't the facts, Jack. Ain't going to happen either. Just like Mexico writing a check for that wall. That ain't going to happen either. Could they pay indirectly? Sure. Through less trafficking that they're probably profiting on? Sure. But from an actual, let me take out my pocketbook and write a check to Uncle Sam? No, ain't happening. So Larry Kudlow had to, for the sake of his own credibility, for goodness sake, had to say, to Chris Wallace, the host of Fox News Sunday, I mean, the American consumer could take a hit. American businesses could take a hit, depending on how, who eats the cost and how much. So we didn't hear much from Larry today. I hope he's not swimming or floating in the Potomac. I like Larry, but I mean, my goodness, is he on thin ice? Because he's no longer towing the line here and spewing lies. He's actually starting to tell the truth. So it's interesting. We'll see what happens with that. But I just want to let you guys know, because Larry Kudlow is one of those infamous guys who comes out for the president and says everything's going fine. He was the one that said there's going to be a signing ceremony in Mar-a-Lago, Florida at the end of March. Was there? No, there wasn't. And now we're told, well, in 3 or 4 weeks we're going to know. Weren't we told something very similar just a couple weeks ago? So the can keeps getting kicked further and further down the road. But let's go around the world here and let's look at what's happening in some of the markets. Now, the Nikkei, again, we do these podcasts later in the evening, so we have the Asian markets open. So the Nikkei, the Japanese markets, they were down a few hundred points earlier. But again, on the back of President Trump's most recent comments, they were able to stage a little bit of a rally. Again, everybody's clinging to hope. I'm getting tired of it, but this is what they're doing. So despite the fact that they were down a few hundred points earlier in the trading session, they are now down 140, which represents about 2/3 of a percentage point down to the downside, obviously. The Shanghai Composite is down about 0.5 percentage point. We have the South Korean market, which was also down, is now up 6 points. We have the Hang Seng Hong Kong markets, they are down over 400 points, representing 1.5 percentage points to the downside. And then we also have Australian markets open, and they are all trading down 1%. Okay? Now, what happened today in Europe? Because we got to talk about our European partners too, because this is global. Because what's Donald Trump going to do with his negotiations in regards to the European Union? Is he going to get tough with them too? So we have the FTSE 100, that's the UK. They were down today about 50 points, representing a little over 0.6% to the downside. The DAX, the German markets, were down nearly 200 points, down over 1.5 percentage points. The CAC, that's the French, they were down over 1% as well. The Italian markets, well, they were actually up slightly. Spanish markets were down 0.7%. But here's what I want to offer you guys. Here's what I want to tell you, because I want to provide perspective to this. Because throwing all these numbers around, I know it gets confusing. Even when you're looking at them, it sometimes gets confusing or overwhelming. But when you have to look at everything from a full picture perspective, that's what we try to do here at the Capital News. That's why I always tell you guys, we're just putting pieces of this economic puzzle together. And we're trying to paint and put together this picture that when we see it, it's going to be very vivid, very vibrant, very colorful. We're going to know what it's telling us. Now, we here are smart enough to know in this 1,000-piece jigsaw puzzle, we do not need 1,000 pieces to know what we're about to see. But the more and more we get, it's either going to prove our thesis or something's amiss. So far, so good for us, okay? But for some broader perspective on what's going on here, let's take a look at some of the yearly gains or losses of the same markets that we have just discussed. So let's start with the FTSE 100. This is year to date, okay? FTSE 100 is down over 7%. The German markets are down over 8%. The French markets are down over 5%. The Italian markets are down over 15%. That puts them well beyond correction territory of 10%, and a bear market is 20%. And this is not from all-time ever record highs. This is from the beginning of the year, all right? Now, you have to recall from previous podcasts when we were talking about the 30 market risks for 2019. That was the list from Deutsche Bank. Of course, we here at the Capital News during our conversations have added to that list, but one of them had to deal with Italy because of their budget deficits, because of their debt, because of their rise in populism, their elections, their upcoming elections, everything. I mean, we're at 5/13. On 5/23, May 23rd, we have European parliamentary elections, and we are anticipating a big rise in populist candidates. Italy is nowhere near the back burner. It's just not getting the headlines. Its stock market is down over 15%. The Spanish markets are down over 11% since the beginning of this year. What's going on in Spain? They got some issues too, believe me when I tell you. So they're in correction territory as well. Now let's go back to Asia. Let's see what's happening over there, because everything's supposedly dandy. The Japanese markets are down almost 8%. Shanghai is down almost 9%. The South Korean market, get this folks, is down over 15%. The South Korean market is down over 15%. I was telling you guys this a few weeks ago because there was some data that was coming out. We didn't dive into it deeply. It was more like a headline news. But nevertheless, we said South Korea is a bellwether for global growth because they are such a major global exporter. These are the proxies that you look for to see what's going on. You're trying to take the pulse. This is a puzzle piece in our economic puzzle. We have to pay attention to some of these countries a little bit more than others. And South Korea is definitely one of them. Since the beginning of the year, down 15+%. Hong Kong, down nearly 10% since the beginning of the year. So almost back in correction territory just from the beginning of this year alone. The Australian markets, however, if you're looking at its broader index, if you're looking at the ASX 200, you're up 2%. So the Aussies are still okay, at least for the time being. What about the old US of A? Well, despite being in the greatest economy ever, is what we're told from our dear leader, the President of the United States, Donald J. Trump. The Dow Jones, year to date, is up 2.5%. The S&P 500 is up a little bit over 3, almost 4. And the NASDAQ 100, I should say, has gained 6%, a little over 6%. This is because the tech sector is still the darling of Wall Street, of the markets. Everybody still wants to cling to Facebook, Amazon, Netflix, Microsoft, Google. You know the names. We talk about them here all the time. What leads you up is probably what's going to lead you down. And that's why I say we're in a mania. Not just with the whole Bitcoin stuff that we really don't go into great detail here because I don't want to promote it. The Lyfts and Ubers of the world, this V-shaped recovery, we are in a mania. Can it continue? Sure can. Sure can. We got a lot of people pulling the levers. We got a president who takes to Twitter to move and manipulate these markets, and he knows perfectly well, that he is manipulating these markets from a statement, from a tweet, and he knows it. You want to investigate something, see if somebody's profiting from these tweets, because maybe he's given somebody some inside information as to what he's going to do. I hope and pray this president is not dumb enough and stupid enough to do such a thing. But if you want to investigate something that has some credibility of there being a problem, an abuse of power, that's it, front and center. $2 trillion wiped off of global equities in a week. That's power, my friends. That is extreme power, and the president knows he has it. He is not to be exerting that type of power and influence over these markets. He is using this as a tool. He knows what he's doing. There's no ifs, ands, or buts about it because he has taken ownership of this economy and stock market. He is nearly obsessed with these types of things. So to say he doesn't know, that would be a flat-out lie. You would be lying to yourself. And then real quickly, our neighbors to the north, the Canadians, because I forgot to mention them, they were down about 0.6 percentage points today, and they are up a little over half a percentage point for the year. So the Canadians are still hanging on, but they've obviously taken the brunt of this too. And it's going to be interesting to see what happens to our friends to the north here, because some of their biggest trading partners are the United States and China. So they're going to get caught up in the middle of this. They already are. It's going to be interesting to see what they do because we've mentioned here how their housing market may very well be overheating. We've talked about Steve Eisman, the character on The Big Short. But of course, this was a real story. Steve Eisman is a real man, but that was a character played in The Big Short, and he was out there saying that, he's taken some short positions on the Canadian banking system. So there's a lot of things here. This is not a fundamentally strong economy. It just isn't, folks. These are just the numbers. These are just the facts. I am not here to lie to you. I'm not here to tell you that everything is going to be fine at the end of the rainbow. It very well may be, but we have to make it so. Just tweeting about it clearly is not doing it. Now, we'll continue to see if the global markets continue to listen to this president tweet and say everything's going to be great like he has for the past 5 months, and yet there's no deal. So, you're supposed to sell yourself short, under promise, over deliver. If anybody should understand it, I thought it would have been the master promoter and salesman Donald Trump. I really think he's setting himself up to fail on this one because I do not think the Chinese are just going to acquiesce and give the United States everything that we are currently demanding. And if you want a deeper discussion on that, check us out on the Political Geopolitical Podcast, episode 67A, because we're going to get a little bit more into the politics. But this is going to be a discussion that we have here going forward for some time, because this thing is not going to resolve itself anytime soon. So stay tuned, folks. I love having you here, and please get the word out. Grow this channel. We need to start helping people. We need to educate people. We need to get them prepared, at least so they can have some sort of plan for right now and for the future. So thank you so much for joining me. Please like, share, subscribe, get the word out, leave your comments. We would love to hear from you. This is the Capital News. I am Alex Karitis. Godspeed.